In this week's video, Dr. Vance Cast explains how you can identify the trend using the exponential moving average.
We want to keep it very simple. The first thing we want to notice that we have a long-term trend and a short-term trend line on our charts. Now these trends are represented by the average price over a period of time, called an exponential moving average. If the price is above the moving average, then it's pulling that moving average up. If the price is below the moving average, it's pulling the moving average down. Now you have to keep in mind that your price is not affected by the moving average. It's just the opposite. Your price moves the moving average. So it's said that your moving average is a function of the price. So wherever your moving average is, according to the price, it'll be pulled in the direction of the price. Think of averages. For example, you walk into a room and there are 10 people in the room and they're all age 20. What's the average age? Well, you add all of the people up, their ages, in this case is 10 people, they're all 20 years old, that's 200, and then you divide by the number of people in the room, which is 10, and you come up with an average age of 20. If a 21-year-old walks into the room, the average age in the room just was bumped up a little bit. Okay? If you had 10 people in the room and their average age was 20 years old, and an 18-year-old walked into the room, then it would pull the average down, wouldn't it? So no matter where your moving average is, if the price is above the moving average, it pulls the moving average up. If the price is below the moving average, it's pulling the moving average down. And that's something to keep in mind later on. A lot of people will talk as if the moving average is autonomous. It's not. It's directly affected by the price. It is a function of the price. Whenever we're determining the trend, as a beginner, you're going to look at the long-term EMA, or the long-term exponential moving average. That's the blue line or the green line. If it's green, then your trend is up. If it's blue, then the trend is down. I know what you're saying if you're an advanced trader. You're saying, well, if the price is below the long-term moving average, then naturally it's going to be blue. If the price is above the long-term moving average, naturally it's going to be green. Therefore, there's a little bit of a fallacy in the fact that we may not really be trending down over a 90-minute exponential average. In all actuality, just because the price suddenly drops below the moving average. Well, you have to keep in mind, again, the moving average is a function of the price. So no matter what, if the moving average is blue, then we can assume that we're trending down. That will get you 85 or 90% of the way in understanding which way the trend is, even though it's not 100% accurate. Well, that little 10 or 15% variance in accuracy is outweighed by the inaccuracy of the market itself. So you're really very, very close to being accurate when you look at just the long-term moving trend as a beginner.
If you'd like to sit in behind the scenes with the trading group, call 888-646-8787 or go to SP500trader.com.